Hello and welcome to Evil Economics, where we explore the darker side of greed and expose the frauds of the past so that when a con man comes knocking at your door, you are educated on their deceptive tactics and are able to defend your wealth, unlike the investors in this week's video. This week we are covering the criminal mastermind of Sam Bankman Fried, the brainchild behind FTX, the cryptocurrency juggernaut that ballooned to having over a $32 billion valuation in just over 2 years after its founding. However, the shady accounting and fraud that allowed the firm to grow so quickly and gain such a high market value ultimately led to the firm's bankruptcy at an even faster rate. To find out how Sam Bankman Fried was able to pull his con off, stay tuned, and be sure to subscribe as we expose new frauds weekly. This is the $32 billion FTX Ponzi scheme. Sam Bankman Fried was the son of two Stanford University law professors. He studied mathematics and physics at MIT, but by the time he graduated, he had taken up an interest in game theory and risk-taking. Initially out of college, Fried found work as a day trader and used his new job as a trader at Jane Street Capital to hone his skills in arbitrage, the exploitation of small price differences in markets to make a risk-free return. In 2017, Bankman Fried quit his job as a day trader and co-founded Alameda Research with his business partner, Tara McCauley. The company's big break came when it discovered inefficiencies in the Bitcoin market. In particular, they took advantage of the fact that Bitcoin was trading at a higher rate on the Japanese market than in the US, allowing them to purchase large quantities of coins in America and sell them abroad for a steep profit. Through these tactics, Alameda grew quickly, but this company wasn't enough for Sam Bankman Fried. Just 2 years later, Sam Bankman Fried launched FTX with the intention of bringing Bitcoin and cryptocurrency investments to wealthy clients who were desiring to take part in high-stakes investments. FTX was portrayed as being a legitimate alternative to other crypto exchanges like Binance, and even managed to land celebrity endorsements from A-listers like Tom Brady, Steph Curry, Larry David, though they would fail to nab an endorsement from Taylor Swift. For the celebrities who endorsed this brand, this would prove to be a disastrous financial move, as the stars would be sued by FTX investors following the uncovering of the massive Ponzi scheme, and FTX declaring bankruptcy. The massive investments into FTX gave Bankman Fried and other FTX executives huge amounts of money that they could use to buy luxury mansions, including a $40 million penthouse in the Bahamas. Massive political donations were made to both political parties in the United States, totaling over $100 million. Alameda, the first company Sam Bankman Fried founded, was at the heart of the FTX scandal. Though it was claimed to be a separate company, Alameda had full access to customer funds at FTX, which were used to make high-stakes investments in the stock market. When these ventures failed, as could be expected, Bankman Fried simply cooked the books. With celebrities endorsing FTX, there was already a stream of investors lining up, and withdrawals made by existing customers could be covered with new cash being deposited. The idea was to make an investment with a return that would cover the money lost and still allow for a hefty profit. But the big return never came, and the losses kept piling up. In order to more effectively hide their trading losses, FTX created a new cryptocurrency that they could manipulate the price of and control. The token, FTT, was released onto FTX's trading market, and those who bought into it would receive discounts on fees used to purchase other securities on the platform. The crypto could also be used as leverage for trading on the site. In reality, however, the FTT tokens were worthless. Legitimate cryptocurrencies require complex mathematical operations in order to record the transactions on a blockchain. FTT, however, featured no-touch technology, and outside of FTX claiming they existed, had no provenance. Alameda and FTX regularly made large sales of FTT to one another in order to create the illusion that crypto was seeing widespread use, and to artificially set the trading price. FTT was used as collateral for billions of dollars in loans for Alameda. With the crypto making up the majority of the company's assets, the value of the token dipping only slightly could send the company into shockwaves. In November of 2022, a leaked copy of Alameda's balance sheet showed its overdependence on the FTT token. The vast majority of the company's assets were in the fake currency, proving to the world that Alameda's foundation was nothing more than a house of cards. Binance, one of FTX's leading competitors, chose to sell its entire stock of FTT tokens, totaling over $500 million, causing the value of FTT to tank. Investors saw this as a vote of no confidence in the token and began following suit. In an effort to stop the free fall of the currency, Alameda offered to buy FTT tokens at $22 apiece. However, it was too late, as the damage had already been done, and this currency was soon to be worthless. As FTT's price dropped, investors were quick to realize that the platform that managed them and sold them might also be in trouble as well. And as a result, investors did a run on FTX, withdrawing over $6 billion in just a few days, worrying that their money wasn't safe. The massive withdrawals crippled the exchange, as they had been loaning out customer money to Alameda, and they had to put a pause on the withdrawals. Those who didn't get their money out in the first 72 hours were never going to see it again. It looked like for a moment Sam Bankman-Fried would be able to save himself and his company by selling out to its rival Binance, but once the Binance executives had a look at FTX's finances, they saw that they had an $8 billion deficit. They were quick to back out of the deal. On November 11th of 2022, FTX, Alameda, and over 100 subsidiaries declared bankruptcy as they were unable to repay customer money. It was determined that FTX had funneled between $8 and $10 million into Alameda during its brief 3-year existence, with over $2 billion still unaccounted for. Bankman Fried would spend the next 2 weeks desperately trying to scrounge up $10 billion, but his search would prove useless, as not only were investors unwilling to put their dollars in FTX, but they were unwilling to put their money in crypto entirely. The FTX fiasco had caused nearly the end of Crypto.com, which had a coin, Kronos, which was compared to FTT, and as a result, it saw a massive drop in valuation, in spite of the company executives assuring the public that it wasn't used in the same way as FTT had been. Those who had invested in cryptocurrency saw their investments take a massive hit as crypto prices dropped to their lowest point since before the COVID-19 pandemic. Bankman Fried was found guilty on 7 counts of fraud in November of 2023, and would receive a 25-year prison sentence for his crimes. He is currently serving his sentence at an undisclosed federal prison. Thank you so much for taking the time to watch our video on the FTX fraud. We hope that you enjoyed it, and if there's a fraud or scandal you'd like us to cover in a future video, let us know in the comments section down below. Don't forget to like, share, and subscribe. Thanks again, we will see you in the next one.